Welcome back to FinHealth Media, your reliable source for unbiased market news. Today, we're summarizing last week's stock market action from February 9th through February 13th, 2026. U.S. stock markets finished last week mixed to lower overall, with earnings, economic data, and sector rotation all playing a role. The S&P 500 and NASDAQ both slipped after early gains midweek and ended the period lower overall. Overall weakness in tech and AI-related names continued to drag markets. The Dow Jones Industrial Average, after briefly topping 50,000 earlier in the week, faded with continued risk-off sentiment. The Russell 2000 Small Cap Index also showed weakness amid broad risk-off positioning. Trading volume was moderate to light in parts of the week, with volatility elevated as investors balanced economic data and earnings reactions. Major factors driving the market. 1. Tech and AI fears, broad sector rotation. Concerns over the disruptive potential of artificial intelligence weighed heavily on markets. Many technology and software stocks retreated amid fears that excessive AI spending could compress profit margins, leading to selling pressure across tech sectors. This AI-related anxiety spread beyond tech stocks, even down into sectors that recently enjoyed strength, indicating broad risk-off positioning among investors. 2. Mixed economic data influences sentiment. Investors also digested a raft of economic reports. Retail sales data pointed to weaker consumer spending trends, suggesting slower economic growth than anticipated. Monthly jobs reports and activity surveys revealed resilient employment metrics, but inconsistent broader economic signals. This mixed picture left traders uncertain about the pace of inflation and the likelihood of future Federal Reserve rate cuts. Earnings reactions impact market direction. Corporate earnings from major firms were mixed. Tech earnings and forecasts weighed on growth names, which were already under pressure from AI cost concerns. Industrial and cyclical sectors occasionally showed relative strength amid rotation out of tech. Overall, earnings results failed to provide a strong enough catalyst to sustain broad upside, contributing to choppy price action. Macro and breaking news. While no abrupt geopolitical crisis dominated headlines last week, several macro-level themes shaped investor sentiment. Global market trends, including overseas markets such as India showing mixed performance, highlighted international concerns. Treasury yields and fixed income markets reacted to slower retail sales and inflation expectations, reinforcing risk-off behavior. There were no significant congressional moves or government shutdown risks last week, helping remove political uncertainty from markets temporarily. Overall, markets were driven more by economic data and sector rotation than by singular news events. Bitcoin and crypto update. Cryptocurrency markets continued to reflect broader risk sentiment from equities. Bitcoin experienced significant selling pressure last week, with forced deleveraging and liquidations as BTC prices moved lower amid broader risk-off flows. Over $2.7 billion in leveraged positions were wiped out, pushing crypto fear to extremes. Bitcoin's price action demonstrated continued correlation with stock markets, particularly tech stocks, rather than acting as a safe haven. This combination of technical liquidation and sentiment-linked weakness suggests that crypto prices are still highly sensitive to equity market trends rather than macro hedging flows. Safe haven assets and market sentiment. Interestingly, last week saw contrasting moves in traditional safe havens. Gold and silver saw renewed interest at various points of uncertainty, with divergent performance suggesting shifting perceptions of risk. Although some reports indicated dramatic precious metals volatility, markets seemed to oscillate between safe haven bids and liquidation flows during risk sell-offs. Bond markets and yields continued to play a role in shaping both stock and safe haven asset behavior, with periods of lower yields often coinciding with stock sell-offs. Looking ahead, this week and beyond. As we enter the new week ahead, investors will continue watching. inflation and jobs data, which can significantly influence interest rate expectations and market direction. Tech and AI sector earnings, as further corporate results may either reinforce or soften concerns around future profitability. Crypto flow and sentiment indicators, given Bitcoin's ongoing correlation with equities. Safe haven performance, including precious metals and Treasury yields as risk appetite continues to fluctuate. This week's macro and earnings catalysts will likely set the tone for how markets navigate the ongoing AI narrative and economic uncertainty. That wraps up your weekly stock market recap for February 9 to 13th, 2026. From AI fears and mixed economic data to Bitcoin's continued volatility and safe haven trends. If you found this useful, like, subscribe, and turn on notifications for daily market insights here at FinHealth Media, your source for unbiased financial coverage. See you next time.